Hi there, Shingirai here again with another update on portfolio performance over the past week. On a relatively risk-off week, we saw performance ranging from CBAM 4 returning minus 1.04% up to CBAM 1v2 returning negative 66 basis points, despite all 10 of the CBAM portfolios outperforming their respective benchmarks. In terms of main contributors to performance, we did see that continuation in the strength of the US markets, with the S&P 500 hedged position up 0.56%. And then most notably, this was a week again where we saw some weakness there for the US dollar after more robust than expected economic data coming out of the US in terms of inflation. That would be signaling to the market that they perhaps might be a peak towards in sight rather for the interest rate hiking cycle that we've been seeing over the past couple of months from the Fed, and most recently that pause in their June meeting as well. We also saw some strong performance there for the longer end of duration, with US government bonds up 0.49% to the Vanguard position. And that's also just a reflection of that sort of peak in interest rate hike expectations rather, working out as a net positive for the longer duration US Treasuries. In terms of detractors from performance, again, coming into the quarter, just 12 days into the quarter now, and on the quarter to date and 1 week basis, we continue to see those headwinds there for the Hypnosis Songs investment trust, down 3.94% on the week, as investors continue to mull really that valuation metric, which would put the fund's net asset value at £2.2 billion, but current pricing indicating a discount of about 53%, as investors really look out for that sort of litmus test again as the sale of some of its catalog. And we look forward to the shareholder continuation vote for the investment trust in September, and that would really give us a bit more direction into the projection that you're expecting for the position. Despite being up on 4% on a year-to-date basis and continuing to enjoy some strong secular sort of outlooks, both on a macro level and from inflation and wage pressures as well, and accommodative monetary policy for Japan, we did see a bit of a sell-off there after a strong rally for the Nikkei, reaching highs last tested in the early 90s, and that would see the JP Morgan position down about 3% on the 1 week basis. On a quarter-to-date basis, 7 out of 10 of the CBAM portfolios outperformed their respective benchmarks, with returns ranging from CBAM 3 down minus 1.09% up to CBAM 1v2 down 70 basis points, in a relatively tight spread there of about 40 basis points between the different range, between a range of worst and best performing portfolio. But we did see that rally I talked about earlier, which I won't spend too much time on, for US equity that was up 0.49% on a quarter-to-date basis. And then we did see some strong performance on the shorter end of duration for the LNG short-dated sterling corporate bond, up 24 basis points. And then some encouraging data, despite really on the surface seeing that flat sort of line inflation coming out of China, with the CPI reading month on month rather, down 0.2%. We did see some encouraging news in terms of policy support for property developers, and that was encouraging for the MSCI China position, up 18 basis points on a quarter-to-date basis. And then also looking at detractors from performance, I did touch on Hypnosis, Global and Japan earlier as well. But in terms of the economic calendar, we did see the trade balance for the Chinese economy deteriorating for the month of May, but some improvement there for workers' earnings in the UK, which has been encouraging, and despite unemployment ticking upwards somewhat, about 4% reading there. The GDP month-to-month for May indicating a sort of contractory reading of minus 0.1, but not really in the end of the day affecting that strong rally we've been seeing for sterling, even testing and breaking above 1.30 versus dollar over the past couple of days. And speaking of dollar, inflation in the US coming in lower than expected and really adjusting those outlooks for the US Fed's path going on forward. But again, looking forward, next week we'll be getting some Chinese GDP data, the US retail sale data as well, and then getting some inflationary readings coming out of Europe and the UK through CPI. And we look forward to seeing you in our quarterly webinar next week on Thursday as well.